What is up, team? Chuck with Traders War Room, and I'm back at you with another video. This is your Saturday tech video, and what we like to do on Saturdays is we like to give you guys ideas to build new strategies, develop new plans, learn a new skill, all to attack the market. Today's topic is going to be support and resistance for directional trading. Without further ado, let's go ahead and get into it. But before you do that, please hit that like, share, and subscribe button and check the description tab because we got all the tools and tidbits and all the hyperlinks for everything Traders War Room right there at your fingertips. Welcome back, team. Legal disclaimer, this is not financial advice. The content is for entertainment and education purposes only. You are responsible for every decision you make. We want you to have fun, use caution, and always go to war. Guys, we have tons of products and services that we provide at Traders War Room. You guys can check out everything we have to offer by going to traderswarroom.com and explore all the products and services. Truly something for everyone, every budget, and every type of trader and investor out there. And after the presentation, please stay tuned for some TWR hot products and services and upcoming classes. The idea is to grow, learn, and share, and of course, make some money. We are going to talk about that support and resistance line for directional trading. So basically, when we're looking at a chart, guys, we always have to be consistent. I tell you guys this all the time, right? We want a bird's eye view approach of the chart. So normally we're looking at the day chart. And the reason why we like the day chart is because it gives us an overall price action with a historical value plus a current value, and we can definitely do some lines. Now, this one is hitting on generating support and resistance lines so that we can create triggers. And basically what we're going to do, so let's take Apple, for example, right? Because Apple's been trending really heavy right now. We're going to go ahead and slide it over and blow it up a little bit so we got some lines. Basically, when we're looking for support and resistance, you can use algorithm bots and stuff like that, and it can give you generating, you know, the technical side of the support and resistance. But in order to become true total traders and stuff like that, we have to be able to look at charts and be able to find these levels for ourselves. And basically, it's all in the eye of the beholder. Essentially, what we're going to do is we're going to put some lines. And I always like to go with the support first. And I'm going to go down here. And you can go onto the little wicks, right? But usually we're using wicks when we're looking at trends, all right? Not when we're looking for lines. I want meat and potatoes, okay? I want something that's touched multiple times and has been rejected from and things of that nature. So I'm going to go ahead and come up a little bit, right? And I'm going to go ahead and put this right here. And we're going to color this blue. I like blue for my support. And then we got to find our resistance, okay? And obviously we can go anywhere. We can go up here, call it resistance, and that's fine because that would be a resistance point as well. But I want something closer that it's touched multiple times. And we come down to here, right? And I like this area right about here, okay? We got some definite touches. We got some rejections. And this is more near term. I'm going to go ahead and color this red. Now, I want you to focus in on this part right here. Notice we broke out of this, right? That's fine. Okay, we had a bullish week and we broke out of this current pattern. But right now, what we're looking at essentially is when we look at near term, we're looking about 2 months out, right? We're trading within range between 150 at the top, or actually, 151 right here. And we're trading in at 132, 133, something like that at the bottom. Trading in a range, right? And notice, we're following our moving averages and stuff like that. But really, we're trying to figure out triggers right now. And so we're not concerned with these moving averages and things like that yet. Those are more when we're looking to get into and out of trades. Right now, we're looking for our triggers to give us idea, and then we'll look at the other things to give us directional patterns. So we have our top line, we have our bottom line, and we'll go ahead and put a further line up too, just for an elevated purpose for a breakout, right? And we can go to this level. I like this level here. It's not too much at the top, it's not too much at the bottom, kind of in the middle. And so we'll go ahead and put a line here, and I'm going to color this one. We're going to make this one just something off color so it doesn't really bother us too much. We're going to go ahead and make that gray, right? All right, so we got our top level, okay? Now, on a breakout, this is where we try to draw these lines. On a breakout or a continuation of where we're at currently, it would be highly probable that we could see a push to the upside. Okay, absolutely. So we have our upside potential there where we could go up and see some rejection at the top and come down from a cool down period. But I want to focus in where we're at currently, right? We're at about, 154 right now. And we got our level here that we broke out of at about 150, 151. With the way the market was going and it was rolling, this right here, boom, 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 right? and we break out of our previous consolidation period high, this tells me that we have a high probability of a cool down period. Now, what happens with the cool down period? Okay, great. I'm glad you asked. I'm about to tell you. Cool down period is the probability of us coming down to our previous level to at least test it is high, especially when we break out. And when you see we broke out, we didn't continue to the upside. We broke out, we hit a shelf, and then we pulled back down. Okay, this tells me that we may not be there yet for the continuation of breakout. Basically, the buyers are being exhausted, and the cool down period from profit taking, things of that nature are going to happen. We got people that have been in here since, you know, early in June, right? They've been in at this level, and they're going to start taking their profits up here because the exhaustion has happened. They're noticing it, and we're going to start cooling down. Automatic sales are going to trigger, and it's going to happen, right? So the highly likelihood of us coming to test this area here is probable. And what does that tell us? Well, that tells us we need to start thinking about puts, especially with options players or shorting, or potentially if we're in shares long, but we're not looking for investing, we're looking for trading, we probably need to start about thinking about taking profits and stuff like that. Now, this gives us this high probability of this. So, you know, we make rules for ourselves, okay? All right. So if Apple were to open at or about this price, and we give ourselves, you know, a little buffer, you know, 151, 149, something like that, we would think about puts. All right. Now, where do we draw the line? So we go ahead and we think about puts, we enter the trade. Now, where are we looking for our triggers to go ahead and, you know, exit the trades or get into the trade, stuff like that? Well, this would be considered a trigger. We got ourselves a rule. If we open around this area here, we're going to go ahead and think about puts, especially if we start to close like on a 5-minute or a 15-minute chart below our top level or near term moving average. We need to definitely think that the momentum is turning. We also pay attention to the sub indicators. If we get the cross on a MACD, that's extremely in our line. We also notice the stock RSI, right? We are above 80 on this one. So we are overbought, which tells us that the momentum to the downside would be in our favor as well, at least for a little push to go test and cool down a little bit. We're also extremely looking pretty like we're curling on the SMI, another indicator that we're probably going to see some downward pressure. So we got two for sure signs that we got some downward pressure coming, that we should be. The MACD is not quite there yet, but it'll fall in line with the moving averages once we start to see that drop coming down. All right. And so we're not too concerned. You know, I usually say, you know, we want 3 reasons why to push to buy, but we got 2 that gives us, you know, 66% probability for the direction of our trade. We like that trade. So we use this as a trigger. Say Apple comes in our range. We're going to go ahead and pull the trigger on a put. We want to stay at the money, in the money as much as possible. So we can always go into the flow, see what we got. We notice Apple's 154.09. All right. We want to look at volume. We want to look at volume, okay? And we notice we got a lot of volume, and these are great, especially if you got the money, but say we don't have the money, right? We don't have that type of money to spend. Where are we looking at? Well, we look at the volume for the cheaper ones out of the money, because that's, I get a lot of DMs like, man, I don't have enough money to go into these deep ones like this, which definitely pay out better. Not a problem, okay? You want the one with the highest volume. We notice 145 has 17,000 volume, right? Our delta is pretty nice. Our theta, yeah, a little concerning, but as long as we stay trending in the direction we think it's going to go, our theta really won't matter because we're going to be moving in the direction, being able to make money. So the 145 would be probably the best out of the money option, specifically speaking in volume terms. So we're going to say that's the one we're going to go with, the 145. All right. Now we're into 145. It hit our trigger. We're going to go ahead. Now, when should we start considering exiting because potential reversals and stuff like that? Well, that comes into where we have to build our probability lines. And that's what I like to call probability lines. It gives us a probability of the direction. Once we got the direction that we're going in and we've decided to pull the trigger to get into the trade, right? We need exit strategies. All right. Now, this is where the meat and potatoes of this presentation come in. I'm going to teach you what I use for exit strategies. All right. It's based off of probability. First of all, I need a 50-50 line. I'm going to go ahead and draw a 50-50 line in the middle. Now, I want something that has the meat and potatoes, right? I want something where some consolidation happens, but I don't want just little wicks. Okay. I want some meat and potatoes, and I want it to happen multiple times where it comes up, it tests, rejects, stuff like that. I like this area right here. I like this area. I think it's a good one. We're going to go ahead and call this orange. And this is going to be our 50-50 level, right? Now, notice we're here. top level resistance, bottom level support. We have our out of the money, crazy, this booms out, right? But I'm going to go ahead and take this out right now because we're not concerned with that. If it happens to push further up, then we'll start making different levels. Right now, we're predicting that we got downward pressure to the downside, and now we're looking for our exit strategies. Now, for Apple, it doesn't move so dramatically. It could, but it hasn't here recently, right? So the likelihood of us going from 150 all the way down to 142 is not highly likely. However, this gives us a probability. If our trigger goes off and it pushes to the downside, we can start going into these trades, the 145 put and stuff like that, right? Don't expect it to come all the way down to a 50-50 trigger line, okay? That's not where we're trying to make our money at. We're trying to make our money on the downward pressure, the downward movement, per dollar movement of the underlying stock. That's where we're making our money trading options. Now, we also give ourselves some internal lines inside of this. So we got our top, our bottom, or 50-50. Now we need some internal lines. These are the levels where we're going to be considering whether we want to exit, trim, secure, and then we can present our stop losses at levels based off of momentum that's going on. And we're going to go ahead and draw inside of these. We're going to go draw more 50-50 lines right here. We're going to call these purple, and we're going to put these in here. And this is what this is doing is we're just breaking down probability, guys. We're breaking down, we're putting 50-50 lines, and we're breaking down probability. And I'll show you that in a second what I mean. And this is a good strategy, especially for newer investors that are looking to try to get something and gauge some lines on these things. So we got our top low, right? Consider this 100%, consider this 100%. This is 50-50. Now, on momentum into our direction, right? These count as 25% intervals, okay? We break this trigger line here, boom, right? The likelihood of us coming all the way down here is not high, right? But the likelihood once we break this trigger, coming to retest this area, 75%. Coming to test this area, 50%, right? 25%, 0% as we come down. So we break our level, our trigger goes off, boom, we're in. 145 put is the one that we decided to get into. We're looking for this level. The likelihood of us coming down to 146 or potentially below to at least test on some downward pressure is a 75% probability. That's how we look at this, okay? That gauges us. When we get to those levels, that's where we need to start considering, hey, I either need to secure my profit, especially for swing trading, right? I need to secure my profit, at least trim my position, and secure some money. And then we start gauging our stop losses, right? We bring our stop loss above break even to risk-free trade at that time. All right. Say we go a little bit further down, right? We bubble around here and we start to go down a little bit further. The likelihood of us coming down for a dramatic push on the same day is not there. But if we have the continuation of the momentum, our probability gets more and more as the days go on and we push down. But we need to understand the likelihood of us coming here and not having at least a rejection to the upside is highly unlikely, okay? So we have to be prepared for the reversal, which is why as we come to each of these step ladders, secure profit considers secure trim position, we come down a little bit more, all right, we're trimming position even more, and we bring our stop loss down to the level that we already passed. It's a risk-free trade all day long. Now, could it come down here after we secure our money and we're out of the trade? Yeah, but guys, listen, when you're playing the option games, sometimes you get the huge bangers that come in, boom, but we just want to be consistently making profit as we go along. So we use the probability scale. Comes down into our trigger, we go ahead, we go puts, boom, we start to come down, we get to our level for consideration for trimming and securing, we got to at least pull out the position a little bit. Now, if we're in one contract, we might be SOL because once we come out of one contract, that's it. But say we got 5 contracts at that price, right? We pull out 2 or 3, reducing our risk, securing money. We come down a little bit more, we pull out some more, and now our runners or our stop losses go to our previous level. And that is how we stay 100% risk-free trades, all profit as we're riding momentum down. Now, we also want to pay attention to indicators because say we come down, right? And, we're below our moving average, which is fantastic. We're coming down, but we start noticing that maybe the MACD crosses to the upside. Maybe our RSI is down and we start to curl up, getting some of that momentum, things of that nature. We need to look at that. And as long as we stay on the downward trend, on the side of our direction, we're good to go. So right here, if you notice, when we're looking at this, we're on the upside of our moving average. This is the direction we want to go. We like this, okay? We like this. Now, we touch and cross and stuff like this, but if we're looking for near-term day trading, or even swing trading, but we're looking to secure on the day, we want to stay above our moving average if we're in calls. If we're in puts, just like over here, we want to stay below. Once we start to get close back to our moving averages, we got to at least consider securing, because that means the momentum is slowing and potentially we're getting a reversal. Now, sometimes we could get a little bit more, but we always have to be looking at the exit strategy and always be looking to secure profit. Now, that's real quick, down and dirty. I hope you got something out of this video, but try this out. Try to build yourself probability lines by giving yourself a top level, a near-term top level resistance point, a bottom level, a 50-50, and draw your probability scales for consideration. Think of these intra levels as considerations levels to secure profits and move stop loss to when you're following the momentum of your trade. Guys, I hope you got something out of this. Now, if you're done with the video or you want to pay attention to the next upcoming segment, please stick with us. If not, good luck going out there. I hope you make some money with this strategy, but we're going to go ahead and talk about some things we got going on here in the near future. Class coming up tomorrow, 24 July, 1 p.m. Central Standard Time. Guys, we are going to teach you how to day trade trends off of multiple time frames. Fantastic class, and especially if you're struggling right now with this volatility in the market, this will be a class that'll be fantastic for you. Okay, you can't just rely off of one type of time frame. All right, we have to rely off of multiple time frames, exactly just like we were talking about in the example inside the presentation. Once we find our trigger levels and we execute our orders, we have to go into the time frames. All right, the 4 hour, the 2 hour, the 30 minutes, the 15 minutes, the 5 minutes, and we have to basically take that data and correlate it into our actual trade that we're in. We're going to teach you how to do that, guys. Next class that we have following on that is 7 August, again, 1 p.m. Central Standard Time. We're going to teach you how to use price action for directional day trading and swing trade, kind of like I alluded to right here with the resistance and the support. However, I'm going to teach you guys how to actually trade. Once you're in the trade, I'm going to teach you how to utilize the price action with the candlesticks and the indicators on how to maximize your entry for the best entry possible and how to maximize your exit for the most profit possible. And I hope I see you guys there. Again, it's $15. You get to keep the recording, and we're going to teach you what price action is, how to find a direction for trades, and how to enter and exit for profit off of the price action. We want to thank you for listening to us today on the Saturday Tech video. I hope you got some value and worth out of it. We want to invite you to come trade with the bulls at Traders War Room and check us out on social media and the web. See what we offer. You can go to any of the popular social medias, type in at Traders War Room, and you can check us out. But you also got some of our links right there. We got the Discord, the website, and the instant messages links right there. I want you to remind everybody, guys, that here at Traders War Room, we look at the stock market like a war zone. Stocks and sectors, those are our battles we do together as a team. We want to attack, conquer, and destroy the market at all fronts, and we do a pretty good job. Now, from all of the staff at Traders War Room and our official Traders War Room mascot Rocket, we want to say thank you for joining us. We hope you found some value and worth out of this video. And as always, if you're ready, follow us and let's go to war together. Have a great Saturday. Catch you on the next video, guys.